Hi, everyone. I'm here with Unchained Executive Editor Steve Ehrlich. Steve, you wrote an article for the Bits and Bips newsletter on how Bitcoin mining stocks are soaring, but this may not actually portend good news for the Bitcoin mining industry, particularly in the US. What did you find with your article?
So this was actually a fun one to write because Bitcoin mining stocks and Bitcoin miners in general, they have a soft spot in my heart. I mean, they're sort of the unsung workhorses of the entire industry. Bitcoin doesn't exist if there's no miners. Yet uh, they continue to play second fiddle, or have continued to play second fiddle to the ETF issuers, to the DATs, to strategy for years and years and years because of just some very challenging economics that they face. Hash rate continues to go up. They have to keep raising money to spend eight, nine, sometimes 10 figures to buy new miners every couple of years in order to sort of maintain parity with this computational arms race to mine Bitcoin. But they've caught a big break. They are right now smack in the middle of I guess the AI craze, the AI bubble, depending on how you want to see it. And in a world where right now Sam Altman and Larry Ellison and all the like are scouring the globe to try to find ways to increase um, data center capacity to run all of these LLMs, Bitcoin miners offer one of the few places or one of the few opportunities to have like turnkey facilities to immediately increase scale. So I spoke with John Todaro, a managing director at Needham and Company, an investment bank, about how sort of the equities analyst world is now re-rating or completely changing the way that they're looking at Bitcoin mining stocks. And basically, what he told me is that Bitcoin mining stocks now are not even thought to be, or they're not being judged as mining stocks anymore. They are being rated as HPC, high performance computing type stocks, like these special cloud providers that can support LLMs. And what we're seeing is a dramatic change in the fortunes of the stocks, which have just been soaring over the last few months, while Bitcoin kind of languishes, goes down a little bit, and that companies are crashing. So this is a really important moment for Bitcoin mining stocks, and for them, I mean, just for their shareholders, it's a very welcome change after a couple of years of having to sort of explain themselves a little bit.
And actually, I just realized something. So Bitcoin miners use ASICs, and ASICs are computer chips that have been designed to specialize in a particular function. And I thought that Bitcoin mining companies had ASICs that were designed specifically for Bitcoin mining. So is it something that can actually be easily adapted to doing AI type computing?
Good question. Not those machines. You're right. They use ASICs. I mean, those are that stands for application specific integrated circuits. Basically, it's just a fancy word for a computer chip that can only do one thing. And in this case, they basically run the hashing algorithm that supports Bitcoin. So those machines can't really be repurposed for anything else. Some other proof of work algorithms that might use GPUs, those could be repurposed a little bit, but the Bitcoin ones can't. But what these companies really want, they want the power capacity, they want the rack space, they want the infrastructure. They will help pay for bringing in the NVIDIA chips and all the other actual hardware needed to make this happen. But factories and warehouses and fiber optic cables don't just spring up all of a sudden. And that's what these Bitcoin miners have in spades. And that's why they're the belle of the ball right now.
And how easy is it to switch from Bitcoin mining to this HPC or high performance computing type of work?
It's not as easy. I mean, turnkey might be a little bit of a hyperbolic term, but it's not as hard as you might think. There is investment that has to go into this because HPC computing is much more resource intensive than even Bitcoin. I mean, sometimes it can cost 20 times as much money to create a HPC type facility as opposed to a Bitcoin mining one. But the trade-off is that unlike Bitcoin mining, where you don't know how many blocks you're going to mine in a particular quarter, it's a rat race and you never know what's going to happen. You can sign these 10 or 15-year contracts where you kind of have guaranteed revenue. I mean, you're seeing this with Core Scientific and CoreWeave. So these companies now know like they don't have to play a guessing game. They don't have to hedge. They know what's going to come as long as they meet their obligations. But the flip side of this means that once these Bitcoin miners make the decision to really turn into HPC, and at this point, John Todaro, who I spoke with for the article, told me that among all the major public Bitcoin miners, the Marathons, the Riots, the Clean Sparks, Hut 8, TerraWolf, Iris, etc., there's not a single one that's a pure play Bitcoin miner anymore. And there were even a few a couple of months ago. Because of the long duration of these contracts, there is no, basically, those facilities will not be able to turn back to Bitcoin even if they wanted to for a decade and a half at least. And that means that this is a major sea change in how these companies are going to operate because um, there is the risk. I mean, we've all heard about the AI bubble. There's so much money, I mean, trillions of dollars potentially being raised to build infrastructure. And a lot of companies that are using AI haven't quite figured out how to implement them into their businesses across any industry profitably. I mean, even we're experimenting with certain AI research tools and stuff. So there's a lot of checks being written. They're going to have to be cashed in the coming years. And if, for instance, the AI bubble pops, some of these Bitcoin miners, they certainly could be left holding the bag and having these big infrastructure outlays where they have to raise debt, they have to do other things to get the money, and they may not be able, they may struggle on the back end of some of these deals. That's the risk. But right now, there's tremendous opportunity for them.
Okay. And so, you said in your article that you feel like this could either send Bitcoin mining out of the US or just, hurt the Bitcoin mining industry in the US. But like, why is this in the US in particular? Why isn't this affecting the entire industry, like even in other geographies?
So it comes down to sort of the infrastructure that already exists in the U.S. Like we have these facilities, we have fiber optic cable laid throughout the entire country. So it's much easier to convert those facilities into HPC like cloud facilities than because sorry, it's much easier to turn those things into HPC facilities than building it somewhere else around the world. Bitcoin mining, in a way, it's almost like water going through cracks or a river that finds its way alongside certain debris in a stream. Like Bitcoin mining is something that doesn't need necessarily the same types of resources. It needs still heavy ones, but it doesn't need the same type of fiber optic cable and all types of other things like this. So basically, what Mr. Tadaro told me is that Bitcoin mining is going to continue to move elsewhere around the world where there's like cheap power sources, but maybe not this very high tech infrastructure that HPC computing really needs. So the implication for all of this is that Bitcoin mining, which I think about 15 to 20% of the global hash rate exists in the US, that might fall a little bit, which is a little ironic given that President Trump back in July said, maybe a little tongue in cheek, that he wanted all remaining Bitcoin to be mined in the United States, and his two eldest sons are involved in a Bitcoin mining company in the United States. But it certainly seems that the U.S. percentage of global hash rate could drop as Bitcoin mining becomes a little bit more distributed around the globe, and these facilities in the U.S., which can be more easily converted into HPC, they take that step because it just makes more financial sense for companies to do that. And basically, like the big picture takeaways here are, I mean, one, as I said before, if the AI bubble bursts and these Bitcoin mining companies have taken on billions in debt, or have gotten over their skis a little bit, that could lead to financial problems a few years down the line. But then basically what's likely to happen is some sort of new equilibrium is going to be created between HPC computing and Bitcoin mining, which is not necessarily a bad thing. And I don't expect hash rate to go down at all. I mean, maybe Bitcoin mining becomes a little more concentrated, or maybe becomes a little less concentrated. We'll have to see what that happens. We'll have to see how that all shakes out. But I mean, the big miners, the Bitmains, the micro BTs, I mean, they're going to keep pumping out more powerful machines. So the hash rate's going to keep coming up. It just, the actual mix of hashing power is something to watch as the years go on.
Okay. All right. Well, super interesting article. Thanks so much for sharing, Steve.
Yeah, thanks, Laura.